Ever wonder how businesses keep track of their money? It's like a puzzle, but don't worry, we'll make it super clear. We're talking about the accounting equation, your secret key to understanding how money works in business. Just like a doctor uses a stethoscope, accountants use this equation to check if a business is financially healthy. Get ready to learn the secrets of accounting. It's easier than you think, and once you get it, you'll see the business world in a whole new way. Ready? Let's go. The accounting equation is like a magic formula. Assets equals liabilities plus equity. It means everything a business owns, assets, is either owed to someone else, liabilities, or to the owners, equity. Think of it like a seesaw. On one side is everything the business owns, on the other side is who has claims to those things. This equation always has to be balanced, just like a seesaw. If one side changes, the other side has to change too. Ready to learn about each part? Let's do it. Assets are things a business owns that are worth something. It's like a treasure chest of valuable stuff. Think of your own treasures, maybe your bike, your phone, or your piggy bank. For businesses, assets can be cash, money in the bank, inventory, things they sell, and equipment, machines, computers, or tools. These assets are valuable because they can help the business make more money. Remember, assets aren't always things you can touch. They can also be things like a company's brand name or patents. Liabilities are what a business owes to others. Think of it like borrowing money from a friend. You now owe them. Businesses often have liabilities like loans, money borrowed from a bank, accounts payable, bills they need to pay, and salaries payable, money they owe their employees. Liabilities are things the business has to pay in the future. Just like you need to pay your friend back, businesses need to manage their liabilities carefully. Okay, let's talk about equity. Equity is a fundamental concept in business and finance, and understanding it can help you make better decisions for your business or investments. Equity is the owner's share of the business. It's essentially the value that the owner has in the business after all liabilities are accounted for. This means that if the business were to be liquidated, the equity would be the amount left over after all debts and obligations have been paid off. It's their piece of the pie. Imagine a pie chart where each slice represents a portion of the business. The owner's equity is the slice that belongs to them, free and clear of any claims by creditors or other parties. It's what's left after all the debts are paid. In other words, equity is the residual interest in the assets of the business after deducting liabilities. This is why it's often referred to as the net worth of the business. Think of it this way. If you sell everything the business owns, assets, and use that money to pay off all the debts, liabilities, whatever is left is the owner's equity. This leftover amount is what the owner truly owns in the business, and it can be a significant indicator of the business's financial health. Equity comes from two main places, the owner's investments and retained earnings. These are the primary sources that contribute to the growth of equity in a business. The owner's investments, money the owner puts into the business, are crucial. When an owner invests their own money into the business, it increases the equity because it adds to the total value of the business's assets, without increasing its liabilities. And retained earnings, profits the business has made and saved, are equally important. These are the profits that the business has generated over time and decided to keep within the company rather than distributing them as dividends. Retained earnings help the business grow and expand, further increasing the owner's equity. The more money a business makes, the more equity it builds for the owner. This is because profits add to the retained earnings, which in turn increases the overall equity. A profitable business is likely to have a higher equity, reflecting its success and stability. It's like watching your savings grow. Just as you would feel a sense of accomplishment seeing your personal savings increase, watching the equity in your business grow can be incredibly rewarding. It signifies not only financial growth but also the hard work and dedication you've put into building your business. Let's imagine you're starting a lemonade stand. You need a table, a pitcher, and lemons. These are your assets. Assets are anything of value that you own and can use to generate income or benefits. In this case, the table, pitcher, and lemons are essential for your lemonade stand to operate. You borrowed £10 from your mom to buy everything. That's your liability. Liabilities are obligations or debts that you need to repay. Borrowing money means you have a responsibility to pay it back at some point. You sell lemonade for £20. Great job. This is your revenue, the money you earn from selling your product. Revenue is crucial because it helps you cover your costs and hopefully make a profit. That £20 is now an asset cash. Cash is one of the most liquid assets, meaning it can be easily used to pay for goods and services or to settle debts. You use £10 to pay back your mom, your liability goes down. The other £10? This repayment reduces your liabilities, which is important for maintaining a healthy financial balance. That's your equity, your profit. Equity represents the value that you as the owner have in the business after all liabilities are paid off. It's essentially your net worth in the business. See how the equation balances? The fundamental accounting equation is assets equals liabilities plus equity. This equation must always be in balance, reflecting the financial position of your business. Assets, table picture lemons plus £10 cash equals liabilities £0 plus equity £10. This simple equation helps you understand how your business is performing and ensures that all financial transactions are accurately recorded. Every business action affects the equation, whether it's earning revenue, incurring expenses, or repaying debts. Each transaction must be carefully recorded to maintain the balance, but it always stays balanced, just like a seesaw. The balance ensures that your financial records are accurate and reliable, providing a clear picture of your business's financial health. Keeping track of your assets, liabilities, and equity is essential for making informed business decisions. By understanding how each transaction impacts the equation, you can better manage your finances and plan for the future. As your lemonade stand grows, you'll encounter more complex financial situations. But the basic principle remains the same. Assets must always equal liabilities plus equity. This foundational concept will guide you through the financial aspects of running any business. So next time you think about starting a business, remember the lemonade stand example. It's a simple yet powerful way to see the equation in action and understand the importance of balancing your finances. With this knowledge, you're well on your way to becoming a savvy entrepreneur. Keep learning, keep balancing, and watch your business thrive. Ready for a quiz? Let's see. Imagine you own a bakery. You just bought a new oven for £500. You paid £200 in cash and put the rest on a store credit card. How does this affect the accounting equation? Think about, what's the new asset? What's the new liability? Did equity change? Take your time and give it a try. Answer at the end of the video. Understanding the accounting equation isn't just for accountants. It's a fundamental concept that can empower anyone involved in business, from small startups to large corporations. The accounting equation, which is assets equal liabilities plus equity, serves as the backbone of your financial statements. It provides a snapshot of your business's financial condition at any given time. It's a helpful tool for anyone running a business, big or small. Whether you're a seasoned entrepreneur or just starting out, understanding this equation can help you make informed decisions. For instance, if you're considering expanding your business, the accounting equation can help you determine if you have the financial stability to do so. By looking at the equation, you can check your business's financial health. Is it making money? Are your assets growing? Are your liabilities under control? These are critical questions that the accounting equation can help you answer. Regularly reviewing this equation can alert you to potential financial issues before they become major problems. Does it have too much debt? High levels of debt can be a red flag for investors and lenders. By keeping an eye on your liabilities, you can make smart choices about whether to take on more debt or focus on paying down existing loans. Should you get a loan? The accounting equation can help you assess whether taking on new debt is a wise move for your business. Should you buy new equipment? Investing in new equipment can boost your business's productivity, but it's important to ensure that you have the financial resources to support such an investment. The accounting equation can help you evaluate whether you can afford new purchases without jeopardizing your financial stability. And talk clearly with investors and lenders. They use the accounting equation to see how your business is doing. Being able to discuss your financials confidently can build trust and credibility with potential investors and lenders. By understanding this simple equation, you're closer to making good financial decisions and reaching your business goals. Mastering the accounting equation can give you a clearer picture of your business's financial health, helping you to plan for the future, manage risks, and seize opportunities as they arise. So take the time to familiarize yourself with this essential tool and use it to guide your business towards success. Congratulations! You've just started your journey into the world of accounting. Remember, the accounting equation is the foundation of understanding finances. Keep learning, and you'll discover more amazing things that will help you make smart money choices. Stay tuned for more tips on mastering your money.